Quick explanation of the topic, prepaid expenses. What is the meaning of prepaid? It means something that is paid in advance, before the time when you would normally pay for it. Prepaid expenses are expenses which have been paid in advance and the related benefits are not yet received. For example, prepaid rent, insurance premium paid in advance, and more. Let us explain this with the help of an example. Imagine your business leases a building for which you pay $50,000 as rent every year. This year, your business decides to pay the rent for next year in advance. This is prepaid expense, prepaid rent for your business. It is treated as a current asset. Common examples of prepaid expenses are prepaid insurance premium, prepaid rent, prepaid salaries, prepaid subscription, prepaid interest, etc. Some major highlights of prepaid expenses. They are recorded when the cash is paid, regardless of when the benefit is received. Point number 2, prepaid expenses are shown on the debit side of the income statement, reduced from the respective expense, and recorded as current assets on the balance sheet. At the end of an accounting period, prepaid expenses are adjusted to ensure accurate financial reporting. They are also called unexpired expenses or expenses paid in advance.